everyone. Thank you so much for joining us tonight. The Center for the Women of New York advocates for women's rights and full equality. Since 1987, CWNY has been empowering women to reach their full potential by offering services that provide the skills, information, and support they need to address economic, emotional, and legal challenges. Tonight, we are having our November financial literacy workshop. The topic is credit scores, mysterious but important, with our guest speaker, Kathy Carroll. Thank you, Kathy, for being with us tonight.
You're welcome.
Welcome. For in case you don't know about what we're all about, we offer financial services. Financial literacy workshops such as this one. Sorry, I'm like looking at the wrong thing. We have services and classes, panel discussions on domestic violence, trafficking awareness, health and wellness, and financial literacy, as I mentioned before. Thanks to Kathy. We also started career advancement workshops every first Thursday of each month. And it's like this one, it's a series, so we have a different topic every month. We're doing disability in the workplace and your rights on Thursday, I think it's December 2nd. We also have a legal support team that answers to inquiries via email. Women in Crisis support group, a caregiver support group for those of us that take care of elderly or aging family members or friends. We have ESL classes, and we do offer referrals as well. So if you don't know if we offer something that you need, just reach out, and we partner with city agencies and partner organizations, and we will guide you in the right direction. If you would like to see any of our past events, you can go to cwny.org/past-events, and most of our webinars are there, workshops. Sometimes we take a little longer, like we haven't uploaded our financial literacy workshop from last month, but we are about to do it, so you can watch anything like starting, going back a month or so. If you'd like to ask questions, please feel free to put them in the chat. They will be addressed at the end of the presentation. And if you are calling in, if you dialed in, you can email us. Unfortunately, we don't have our tech expert tonight with us, so we don't have anyone who's monitoring our email. But if you would like to ask any questions, please email them to us, and Kathy will be happy. I just checked with her, and she will be happy to answer later. Okay. Sorry about that. My slides got stuck. I'm sorry about that. Oh, there we go. Just got stuck for a second. If you could please share your zip code. This is for funding purposes. When we ask for city money, we are asked like, where is your audience? Where they're coming from? So it will help us to have your zip code. That's it. You don't need to put any other information in the chat. We appreciate it. If you dialed in, and you could please email us also to events@cwny.org. Same email as where you would send your questions. Please email us your zip code. Kathy, welcome again. Kathy is a professional accountant. She has been practicing accounting and providing bookkeeping services since 1981. To the present, she works with individuals and corporate clients. She directed and ran the student Association Income Tax Preparation Program at Queens College for 26 years. She also ran an annual seminar at the International Students and Scholars Office at Queens College. These programs provided free on-campus tax preparation and advice to students. We're hoping to do the same at the center this coming tax season, which seems to be taking, the whole year this year, all the extensions. But hopefully our next, individual tax season, we will offer that. Thanks to Kathy again. She received a BS in accounting from CW Boss Center of Long Island University and attended a graduate program at New York University. Kathy volunteers at the Center for the Women of New York as current treasurer and former vice president of finance. She provides job and vocational training, presents at our financial literacy program, and is the CWNY Work Readiness Program advisor. Kathy, welcome. Thank you so much for being here tonight again.
Thank you, Cecilia. My pleasure as always. So tonight's topic in our Female Financial Freedom series is credit scores, mysterious but important. As Cecilia was saying, this is an ongoing series. And in our webinar last month, our topic was consumer credit. That webinar was an overview of different types of credit available, including credit cards, personal loans, and lines of credit. All of these, if used carefully, can enhance one's daily life. But what if one cannot access consumer credit? How would that happen? And how can that be changed? The answer will usually lie in one's credit score. Before we delve into the topic of the credit score, let's look at a definition of credit. What is credit? Credit is the measure of trust that one party has in another party's ability to receive some kind of resource now and pay for it at a designated point in the future. That's the definition according to the website bankrate.com. This is one of the many financial websites that are out there. Later on in the webinar, we're going to have more sources that really provide a lot of good information about not only credit, but other types of financial topics. So as we go through the webinar, if you want to take a note of what these websites are, they're very helpful. How trust is measured. If credit is a measure of trust, then a reliable indicator is needed to estimate that measure. The most common indicator used throughout banking and financial circles to measure the degree of one's credit worthiness is the 3-digit credit score. This score is known as one's FICO score, and it reflects the contents of one's credit report at a given point in time. What is a FICO score? A FICO score is a credit score created by the Fair Isaac Corporation. So when everybody says, oh, the FICO score, this, that, and the other thing, this actually was developed from the name of the company that developed it, and they're still in business. So lenders use borrowers' FICO scores along with other details on borrowers' credit reports to assess credit risk and determine whether to extend credit and in what amounts. FICO scores take into account data in 5 areas to determine one's credit worthiness: their payment history, current level of indebtedness, types of credit used, length of credit history, and new credit accounts. And this information comes from another good website, Investopedia. FICO is an acronym for the company that developed the software programs that estimate one's credit worthiness. The Fair Isaac Corporation was founded in 1956 by Bill Fair and Earl Isaac. The company is in the business of analytics and decision management solutions and software. The company is based in San Jose, California, and employs over 4,000 persons. And this is their own website. That's their company website. FICO credit scores are a method of quantifying and evaluating an individual's creditworthiness. Scores range from 300 to 850, with scores in the 670 to 739 range considered to be good credit history. It's not great, it's just good. And we're going to see later in a slide that one of the sources actually considers this range to be fair, but scores in this range will usually be able to get credit. The FICO scoring methodology is updated from time to time, with the most recent version now being FICO Score 10 Suite, which was announced on January 23rd, 2020. So this company is always updating what goes into developing a person's credit score. What do these scores really mean? The information from Investopedia indicates that a score of 670 to 739 is considered to be good. So what does that mean to the average person? It means that a person would have an excellent chance of qualifying for a credit card. Such a score would also be helpful in obtaining a car loan or a home mortgage at a favorable rate of interest. So a good score will help someone obtain credit and to obtain that credit at a favorable rate. Many people do not fall within the range of good credit. Depending on one's score, a person may qualify for credit and loans, but they may have to pay a higher rate of interest. Or in the case of a purchase of a car or a home, they may have to put a substantial down payment in order to qualify. So if someone's credit is below average, it doesn't mean they're not going to be able to make purchases and make large life decisions like buying a home or buying a car. It's just that they may have to have less favorable rates and terms and may have to put down more money than someone with good credit. Now, no credit is a perplexing situation. So a perplexing situation would be to someone with no credit score. This could happen to a younger person who has not yet established credit, or perhaps to an older person who has shied away from the use of credit. These people may have similar problems obtaining a loan as if they were someone with below average credit, even though they may pay all their bills on time. A lot of these lenders now are starting to look at, to a greater degree, how people pay their bills in addition to the credit score, because someone that hasn't used credit at all but pays the bill the minute it comes into the house, obviously they're a good credit risk, but that wouldn't reflect anywhere because they would have very limited credit score on file. So the banks or the lenders would have to look at, are they paying their bills on time? Rent, utility, usually rent and utilities are the big ones that they would look at. And that's becoming more prevalent now than in the past. One of the reasons that credit scores may seem mysterious is that one score may change for seemingly no apparent reason. If a score changes, one may obtain a report from one or all. Excuse me, I'm sorry. One or all of 3 credit bureaus in order to see what is going on. A credit bureau is an agency that collects information on how promptly people and businesses pay their bills. This information is from the textbook that we've been using throughout the series. The 3 major credit bureaus reporting FICO scores and other information are TransUnion, Experian, and Equifax. All 3 credit bureaus collect the same type of information about consumers. This includes personal data, such as name, address, social security number, and date of birth. It also includes credit history, including debts, payment history, and credit application activity. It is common practice for the credit bureaus to collect information from federal and private student loans and housing lenders. This information, again, is from the Investopedia website. The effects of student loans and taxes. If you are delinquent in making student loan payments, Sally Mae, they're the government agency that administers student loans, can report you to a credit bureau, typically after a 45-day delinquency. Federal loans provide more leeway, allowing 90 days to pass before filing a report. The Internal Revenue Service, IRS, doesn't report overdue income tax to the bureaus. However, if a taxpayer does not repay their tax debt in a reasonable amount of time, or if they owe a lot of back taxes, then the IRS will file a federal tax lien, which is a legal claim against the taxpayer's property with the local county clerk's office. A tax lien is considered public information, and the bureaus can find it through third-party research. Getting your credit report. As per our textbook, www.annualcreditreport.com is the only authorized online source for a free credit report. This is very important because a lot of times people may go online, they want to find out about their credit, but they're not sure. There's a lot of websites out there, so you have to be very careful. This one is the only authorized online for a free credit report. As per federal law, one can get a free report from each of the 3 credit bureaus every 12 months. One can also call 877-322-8228 or complete the annual credit report request form and mail it to Annual Credit Report Request Service, P.O. Box 105281, Atlanta, Georgia, 30348, 5281. Now, since there's 3 credit bureaus, you may say, oh, maybe one is more important than the other, or maybe banks and lenders look at one more than the other. That's not the case. Credit information is often not reported with the same accuracy across all 3 credit bureaus. So it is important for consumers to check each report and score. Under the 2003 Fair and Accurate Credit Transactions Act, FACTA, an amendment to the above-mentioned FCRA, that was earlier in this article from Investopedia, consumers are able to receive a free copy of the report from each credit reporting agency once a year. As some creditors and collectors only report to 1 or 2 agencies, some items get disputed off one report but are verified on another. Items also get removed from 1 or 2 reports for various reasons. And it often means a large credit score difference from bureau to bureau. When a credit score is requested, it is calculated based on what is in that particular credit report. So if, let's say, TransUnion doesn't have updated information that Equifax may have, the 2 credit reports are not going to be the same because they don't have, at that point in time, the same information. Thus, while a consumer may have a solid credit score based on one report, they may have a dicier credit score based on another. If a consumer is denied credit based on one bad credit score, but has a better credit score with another bureau, they may have luck calling the creditor and asking for the better score to be considered, especially if there is a good reason why the first credit score is low. Now, this next page is from something that was from a website called Credit Karma, which we're going to discuss in a minute or two. But now this is just an example. This was a particular, this is the same person had from TransUnion a 680 score, and from Equifax, the score was 13 points higher, it was 693. So now it's interesting to show that this Credit Karma website considers both of these scores to be fair rather than good. But it doesn't matter what they call them because both of these scores are definitely good enough to qualify for a loan. But from the two bureaus shown here, the scores differ fairly significantly. So that's why it's important to know, what is contained in each one of these reports. Now, the example that I just showed of the two different credit scores was from Credit Karma. The credit score example shown is from an online service called Credit Karma. This is their website. This is a secure, reputable, and free of charge website which provides subscribers with valuable and simple to understand information about their credit history and score. It provides insights into how a subscriber can make changes to improve their score. For example, it was saying in one of the things that I was reading that if you have a certain amount of a limit on your credit cards, let's say the limit is $1,000, that in order to have a higher credit score, that you should have credit utilization of 30% or below. Now, that may not be possible if someone really needs to use their credit cards, but that was a good insight to show someone that if they pay down their credit cards to below 30% of the outstanding credit limit, that their score should go up. This is like not stuff that's really common knowledge. So it's good that it's on a website like this that just is very you don't have to be a financial expert to understand it. One of the easiest and most important ways to take the mystery out of your credit score is to stay informed. A service such as Credit Karma provides frequent updates. These updates can help fend off unauthorized use of credit or provide explanations into a sudden score change that may need to be addressed. Although one's FICO score is a major factor in obtaining credit and loans, there are other factors, particularly income, that are very important. For example, one may have a high score, but if there is no steady source of income, credit still may be difficult to obtain. But having a good score is certainly an important step in the credit process. Now, these additional sources on the next page or two, these are courtesy of our past president, Victoria Pilati. So I want to thank her for providing a lot of additional sources here that really can be useful and helpful to people. And these are more sources that Victoria had provided. And then that's another one. This is was from CNBC. So thank you and happy holidays to all. Happy Thanksgiving. Our next webinar is going to be January 19th of 2022. We won't have a webinar next month due to the holidays. Our topic in January will be a preview of 2021 income tax returns, including the advanced child tax credit that's being given out, how that's going to work on the tax return itself. So we're hoping to see you again in January.
Thank you so much, Kathy. As always, like super valuable information. We really appreciate it. It's like, like there's so many little things that I always learn. Sorry about that. I always learn about, financials and how to handle them. Let me stop share for a second so I can see you. The chat. Okay. Yes, thank you, Lana, for being here. Our tech expert has shared on in the chat some links that are, to find us in social media, to become members. But I wanted to ask if anyone has any questions, feel free to put them in the chat. I just wanted, something came to my mind when I came from Argentina 20 years ago. I was so surprised by the credit scores and how it affects everything that you do in the future. And I was surprised by seeing how that and law enforcement keeps people on track, right? Because you like, it's like there are consequences to your behavior. And I was like, I admire that so much. Like if you behave, you're going to like, it's going to show, and it will be easier for you. If you don't, then but sometimes it's easy to, to miss things. In fact, like it did happen to me. I always had, it was really hard at the very beginning. I wanted to get a car when I got to this country, I had no history. So it's really challenging. And I wanted to ask if you had any advice for young people or people who haven't, like me, like came to this country that do not have any history. What would be, the first thing to do, like to start your credit history with, and start going in the right direction to be able to purchase and to get loans in the
Well,
future?
I think the first thing is, as we discussed in the webinar, I think last month we were saying about that it's best to start just with like a simple credit card, like maybe a store credit card, and then make sure you keep up with that, keep the payments on time, don't let the balance get too high, and also establish a bank account, like to just open a checking account, just to have like a presence in the banking system. Because it's interesting, like one of the things that I had discussed was about people that have no credit that are younger, like some, one of my friends, he bought a house, now he's older, so he has a house many years. He bought a house when he was very young, but he had a very good job. He had graduated from college, got a great job, but had no credit history. So he was able to buy the house, but he got charged like 2% more than the going interest at the time, just because they could find no credit history on him. So it was really, obviously after a while, since he was paying the mortgage, then that instantly gave him a credit history, and he was able to refinance it and get a lower rate. But it was just like he was being penalized in the beginning. Like, this is such a great thing that a young person could even buy a house. And then they're saying, oh, we can't, we have no credit history on you. We can't find you. So instead of paying, at the time, the rates were much higher than they are now. So instead of paying maybe like 7%, he had to pay 9%. So it was really kind of,
It's a
unfair.
big
If you,
difference, especially
yeah,
long term.
sure.
Yeah.
And if you just like, thought about just having a credit card, or, just doing a little bit with credit, that would have stopped that problem. And that was the problem of no credit history, not even bad credit. So
And you said that he was able to refinance. How long does it take to change your, or to, like, if he didn't have much of credit history, but if you don't have a great credit history, how long does it take to change that? I know, like, sometimes it can take a while. Like, let's say, like, you get a loan, interest is really high. And when should you expect to be able to refinance and be in a better position to get less interest?
I would say that it depends on the situation, but typically it would be within a year, especially on a house purchase, because once he was able to get into the house, and obviously he was making his mortgage payments on time every month, then I think it was like after a year or so, he was able to refinance it and bring the rate down. So generally it doesn't, people think, oh, this is going to take forever to fix. I would say that, whatever it is, I mean, no credit history can be fixed a lot easier than bad credit. But any kind of credit situation can usually be improved if you really stick with it. I would say it should start looking better within 12 months. It's not like it takes forever. Unless there's major things going on, which, we didn't discuss that in any of these webinars so far. But, if a person declares bankruptcy, I mean, that's like I don't think that's something that people should really ever do unless the circumstances are so extreme. Like, I never recommend that to my clients or friends or anything, because that takes 7 years to come off your record. And then on every application that you file, even after it's off your record, there's usually a question asking, did you ever declare bankruptcy? And, you can't lie on applications and things like that. So that kind of extreme situation takes a long time to clear up. But normal types of credit problems can usually start to resolve themselves within 12 months.
Thank you so much, Kathy. Another question I had is like, so many women rely on their husbands, right? Like, and some women don't, are not the first like name on a loan or a mortgage. Uh, do you have anything to advise to women, like just to, because you never know what's ahead of you, and hopefully everything goes well, you're always with your partner, but I do see a lot of women that are like, oh, like my husband works and he's the one with a credit history, with a bigger like income, so I'm going to rely on his credit history. What do you advise? Like if you, like, let's say like you don't really need to have a good credit history or look at it. Do you advise to be looking at your credit history, to be checking that once a year when it's free to, like to ask for your score?
Yes, I would definitely recommend that. So even if in a situation where if women are, basically relying on their husbands or the husband's credit, because exactly what you said, listen, in life, you never know what's going to happen. So it's important for women to have their own credit history, like maybe have a small credit card or, one or two credit cards, not without their husband knowing it, but it should be in their own name, not within their husband's name or not a joint account. So if they have that, then they're establishing their own credit, and then they can check their credit report and see how that's going along, because it's just with the way modern society is, it's just very important for everyone, every individual to have their own credit history and report on file.
Thank you so much. Yeah, absolutely. And when I say husbands, like it can be any partner, right? Like it can
Right,
happen the
sure.
other way around. It can happen in any couple. So that's just like one example. Um, Thank you so much, Kathy. Please feel free again to share any questions you have. Take advantage of Kathy being here and being knowledgeable about this topic. If you have any questions, feel free to put them in the chat. But I really thank you. It's always very informational, very helpful. And again, like if you would like to share this webinar, this presentation with any friends, like guide them to our website, past events. And let me share my screen again. I know Lena already put this in the chat. If you're not a member and you'd like to become one, please go to our website. There are a couple of ways to become members within our website. And if you'd just like to donate to help us continue with these programs that are free for anyone, you don't have to be a member to attend. Go to cwny.org/donations. We do have 2 locations in Queens. One is in Queensboro Hall, and the other one is in Bayside in Fort Totten. We're hoping to open, to start doing in-person programs there in the spring. And we're on social media. I know, thank you, Lena, for putting all the links on the chat. And that's it. Well, Kathy, thank you again. And thank you
welcome. My
everyone
pleasure.
for coming here, and remind us the topic for January. We're not going to have a workshop in December, and stay tuned for January, but we do have a topic, and I'm excited about that, right? It's a preview for the tax season.
Yes, we have to get going with that.
Yeah, so you had to go all year round doing taxes this year.
I know it's been quite the drama with these taxes the past 2 years.
Yeah, so Kathy will be bringing
hopefully this next coming tax season is going to be somewhat normal, hopefully.
Yes, hopefully it is. So Kathy will be bringing us up-to-date information and any news updates on taxes in January. So join us then. And thank you so much for coming tonight, for joining us. Have a great night. Have a good night, Kathy and Lana.
Thank you. Thank you, everyone. Thank you, Cecilia. Thank you, Lana.
Good night.
Good night.